Welcome back, everyone, to Real Charlotte Living, a podcast about Charlotte area lifestyle, business, and real estate. I'm your host, Camila Peebles-Brathwaite, and today we are going to be talking about appraisals. Now, appraisals can be sort of this elusive thing that if you're not in the industry or haven't purchased a home recently, you may not know much about it. So today, I have Peter Gallo. He is the owner of HomeSight Appraisal LLC in Charlotte, North Carolina. And Peter has over 30 years of experience in the residential appraisal market. He is on various leadership committees and is involved in the National Association of Realtors and serves on the board for the Charlotte Regional Lenders Association. Is that correct? And the list goes on. Honestly, this man is deeply rooted and truly is a subject matter expert when it comes to appraisal. So I'm very excited to have you here, Peter Gallo. Thank you for joining me.
Thank you.
Thank you. So Peter, I always like to start with just finding a little bit about your story briefly. Like, how did you get into the appraisal world?
Sure. No, I mean, so I'm originally from Buffalo, New York, and coming out of college in 1990 with a degree in communications and English, I didn't have a lot of specific job prospects. So I think I started working at the Federal Reserve Bank branch in Buffalo, and one of my college buddies got a job at a local appraisal firm, and they were hiring. They needed people to do a revaluation project for tax assessment.
Okay.
And so I got hired. I applied. He said, "Hey, you should come, and try." So I applied. I got the job, and then the job fell through. And they hired like 4 of us, and so after the job fell through, they kept 2 of us, and we stayed on with their commercial division and started training as commercial appraisers.
Okay.
And then they needed people more in their residential side.
Okay.
And so I went and I interviewed with the president of the residential side and moved over there.
Okay.
And I've just been doing it ever since. It's one of those things where, it's not like my ideal, I think I'd rather be
up going, Dad, I want to be an appraiser.
Yeah. I think I took a college career test and they said I was going to either be a sergeant in the Army or a race car driver.
Okay.
So it's not either of those,
yeah.
But it's one of those things where once you become good at it and comfortable with it, you kind of stick to what you know, and that's kind of been my career. There's been ups and downs, but it's like, I'm just going to stick with it.
Yeah.
And it's got me through up to this point.
With a career that's spanned, now over 30 years, you've probably seen a little bit of everything.
Yeah.
Which brings a lot of value to your services. So, like I mentioned earlier, a lot of times the word appraisal, unless you're in real estate or lending, it's not a familiar term. So I just want to start with the basics of what is an appraisal.
Sure. Well, an appraisal for mortgage purposes, when a buyer or seller might see it for financing, is really meant to be, we're an unbiased third party that comes into a transaction and basically gives the lender confidence that this transaction has other eyes on it besides the marketing side, or there's advocacy on both sides for their client. So our client wants a third party that has no bias to come in and take a look at it and put their stamp on it. And then when they make the loan, most of the times that loan, either they hold it or it gets sold. And so when it has an appraisal, when that loan package also has an appraisal, that loan is more sellable to investors down the road on the secondary market. So and really that's the purpose of an appraisal and an appraiser, is to be an independent, unbiased third party that can analyze the market. We're not advocates I mean, we can lose our license if there's any evidence of bias or anything like that.
Okay.
So that's where our value is. But we're knowledgeable, and just like the realtors are, we'll have the same tools, we'll have the same data, but we have a different perspective as far as advocacy goes. And a big factor is who our client is. That's one of the few first things that we want to know before taking on an assignment is who the client is and what the purpose of it is. So if it's for mortgage financing, we know what we're dealing with. If it's if somebody calls our office and they need an appraisal for an estate, we'll ask them, well, who's the client? Because we can't give, the appraisal is confidential to the client. So, and that's where we come into a lot of the misunderstandings about communication with the appraiser in the realtor world.
Yes.
Because we can talk, you can tell me whatever you want to about the property, and you can give me whatever you want.
You don't have to listen.
Right, and I'm exactly. So I'll decide what I put in the report or what I consider, what I give weight to, and that's my job. We're investigators basically, but then when we do the report, when we actually deliver the report to the client, now that report is confidential. And our opinions and the value and all that's considered an opinion of value.
It belongs to the client.
To the client, and they're the only ones that we can discuss report results with. We can't really talk to the agents or the buyers unless the client gives us permission. So
when you're doing an appraisal, what are you looking for?
I mean, the process is for us to go out and basically experience the property. That's the first part, and that goes to driving the neighborhood, coming up on the property, measuring the property, and when we measure the property, we're outside and we're not only measuring, but we're looking around, we're looking up, at the roof, we're looking at the neighbor, we're looking around to see if there's a water tower, there's any external issues, any views, positive or negative, that might affect value. And we're really going in it as a purchaser, in the purchaser's mindset, and trying to understand the property and its marketability, condition, quality. And we're looking at specific things just that we would have to report on anyways, like appliances, specifics. And then what we'll do, that gives us the knowledge about that property, about the subject property. And then what we're trying to do, then once we have that, we go out into the market and we try and find substitutes for that property. And that's called the principle of substitution. Appraisal is basically we're going and we're looking at other listings. Basically what you would be doing as a buyer's agent, you're going to show your buyer competing properties. That's what we're looking for. What are the competing properties? And that's listings and pendings, but also, mainly closed sales. Because those closed sales are the proof and the evidence that the market has bought in, that this is where that comparable might be, or might be a comparable that we're considering to be a comparable. And so what we're trying to do is trying to figure out where that property that we're appraising lies in the market, where its place is.
And are you usually looking for, as best you can, like for like, in terms of a house? And my understanding has always been, and tell me if I'm wrong, the first place you're going to look is within the neighborhood. And then sometimes, there's either something unique about a property, or it's not in a very standardized neighborhood. So then you kind of have to go outside of that. Is there a limit to how far you will go, or? No, I mean,
for lending, there's variances, and it's just basically you have to explain if you're doing something. If you're doing a unique property, there's going to be a lot of things that you're going to kind of be going outside the normal variances, within 6 months. So what you wind up doing is when that happens, you just have to explain what you're doing. And it has to make sense. Anybody looking at the appraisal, your client, they should be able to understand what you're doing.
Yes.
There shouldn't be all kinds of leaps in there, and just throwing things in the report.
Yes.
I mean, the appraiser needs to paint the picture. And in some senses, it's frustrating because what Fannie Mae and Freddie Mac want are more data points, and they're starting to get away from, they're telling us that they want us to explain, and that's how we learned. Hey, if you don't have something precise, explain it. Always, your backup's always to be able to explain. But a lot of the forms that you do for lending are checkboxes and that type of thing, and they really try and get it to data points, so it's all quantifiable. And many times that's just like trying to put a square peg in a round hole. And that's our job, is to paint that picture. And that's where the art versus the science, that it's both an art and a science, kind of come in. So that's our job, is to paint that picture with the data we have, being supported, but also being understandable and make sense.
For a buyer or a seller, what's the value of an appraisal, or how does that benefit?
The simple answer is, for a buyer, it helps you know what you're buying and if it's worth what you're, And for the seller, we do a lot of pre-listing appraisals. It helps, where you maybe have that unique property. We've certainly, that's where we find more often than not.
The greatest need for it,
when it comes to just helping. There's a lot of unique properties in Charlotte, and little pockets. And it's tough. Agents have a tough time. We have a tough time as appraisers, but we're able to, and we just know, we kind of have a knack because we know the processes to go through, and we're more comfortable with putting that number down and then putting a stamp on it and saying, hey, this is, but when it comes down to it, it's an opinion. It's an opinion of value. You don't have, not everybody's going to agree with it.
Because until it's actually sold and closed, then you have the real of what the market's willing. And
that's what appraisers are. We're observers. We're observers and investigators. So we are actually watching what you do as a broker out in the field, and seeing the transactions and go. And you are really, and the market is really what dictates what we do, because we just report on that. And there's this misconception that appraisers set the market. We just report it. And sometimes, they don't like the messenger and they don't like the message, but this is what's happening. And I was going to say, I know you're talking about, and this might be your next question, and it's a common question, is the kitchen, renovating the kitchen? Is that what? And I was thinking about this last night, actually, thinking about this, talking to you.
Like, what are the common misconceptions, and what actually adds value, and does it add value?
So I'm going to say the easy thing, which is the misconception. So, a lot of times we'll go into a house and the homeowners will say, oh, we just put the new roof on, or we just put all new windows in. Well, that's a misconception that it's dollar for dollar. No, it's like, well, if your roof was leaking, then, these are maintenance issues that you're keeping your value where it is. You're not necessarily, now, it might bump it up. Maybe if you have custom windows, or you're putting in something a little different that adds a little something. Like an architectural roof, where maybe it was just, one of those plain roofs. But again, that's a maintenance item. It's something that buyers will expect to be working. And if it isn't,
expect to have a functioning roof without leaks.
So, and it's funny, so solar, like markets react differently to that type of thing. And it's funny, I think, in Charlotte versus Raleigh. I think Raleigh, it's a more kind of accepted. And even when I go out to New Jersey to visit my sister and brother-in-law, you see solar everywhere. And in Charlotte, it just doesn't seem like, and maybe it hasn't gotten there, and maybe there's pockets, but it just doesn't seem as prevalent here in Charlotte. So that's interesting. People might expect something, but hey, there's opposite views too, where, hey, I really don't like those solar panels on the roof, and they're intrusive, or and the same thing with pools. You go to where I'm from, Buffalo originally, you get to use a pool for 2 months maybe.
Yeah.
You know, we had one and that's what I mean, even when in June, it's
Yes.
still almost too cold to use your pool. So the amount that you're spending to put something like that in, cost doesn't always equal value.
Yes.
So that's a mantra that you hear from appraisers: cost doesn't equal value.
Yeah.
But the main point I wanted to make was, we always talk about location, location, location. So the most value, where you get the most bang for your buck, or the value,
Okay.
it's where you're located.
Okay,
It's
yes.
really your land.
Yes.
It's the land value.
Yes.
And so because the cost to build a house is not going to change. You can spend $500,000 on building a 2-story, 2,500 square foot house, and that's what it costs. Now, if you put it on a waterfront lot,
Yes.
the property value, not the house value, the property value is what we're looking at,
Yes.
is going to be different than if you're next to a landfill and you
Okay.
spent the same amount and built, or it's on a smaller lot versus a bigger lot. So land value
Okay.
and location,
And location.
is important.
Okay.
Is really what, it's almost, and as a broker, that's probably the first question you ask.
Yeah.
Well, where do you want to be?
Yes.
And
What's your budget?
Yeah,
And where do you want to be?
Right.
And will your budget get you what you're looking for with where you want to be? And then sometimes you have to choose between, it's schools. And then sometimes it comes down to, well, this is your budget. This is what homes cost in this area. What's the priority then?
Right.
Is it your budget or is it the location? And if it's the location, then we're going to have to change some of the things that you're looking for, But to your point, that value is, it's with the land. The appreciation is going to be greater.
And people are moving here because they want Charlotte.
Yes.
It's location.
Yes.
It's like, we just want to be in Charlotte. I don't care where it is.
Yes.
And so that makes it easy. Right?
Anywhere in Charlotte.
Yeah.
And now I'm starting to feel like if it touches Charlotte,
Right. And it's funny how you go outside Charlotte, and the further out you go, the markets change. Demand changes. But there's definitely pockets outside of Charlotte that are in demand.
Yeah.
And again, but maybe you can get the waterfront that you want, but it's not in Mecklenburg County.
Yes.
It's in Lincoln County.
It's a different waterfront.
Yeah, but it's the same, and you can actually get more for your money.
Okay.
It's just maybe not right down the street from, the grocery store that you like, or
Okay. Yeah.
The amenities might be different. So when it comes to the biggest bang for your buck, it's going to be location and the land.
Okay. One of the last questions I wanted to ask is, sometimes homes don't appraise. So let's say, you're under contract.
Don't appraise. That's not the proper.
Yes, that's not the right wording. Let me explain.
They're not credible.
Sometimes buyers and sellers come to an agreed price, and the lender then has the appraisal done, and it is not the same as the price that's
Right.
agreed to by the buyer and seller. In that case, are there options for, the buyer to, have it reappraised?
So going back
what are
to
your options there?
What I said, we can't. It's confidential we can only talk to the client. So
Okay.
normally in that case, everything has to go through the client. So,
Okay.
So the borrower, who is probably the buyer, can ask the lender for reconsideration of
Okay.
value, and it's a huge issue. It's something that just got standardized
Okay.
in the lending community by HUD and FHFA, where now every lender has to have a reconsideration of value process in place.
Okay.
And they have to advise their borrowers that it's there
That
for
it's
them.
an option for them.
Yeah, and they
Okay.
always did this anyways, but now they're actually putting rules in place saying you have to do this.
Okay.
You have to make sure that borrowers know that there's this process in place. And basically what that is the lender will have a form or some sort of format or process that they will engage with the borrower, to provide them with information, whether it's sales that the borrower thinks should be considered, or they think the appraiser missed an amenity or something like that. And then the lender will come back to the appraiser, and then the appraiser will respond to that. And they'll either revise the report, provide a new report, or whatever, respond in it some way.
Okay.
And then that, so there is a process, there's always been a process in place to do that.
Okay.
And you know, I thought you were getting at a different question, but another thing that is not always known or understood is that appraisers can consider in their reconciliation the contract.
Okay.
And so we have 3 approaches to value: the cost, the income, and the market approach. And the sales comparison approach is where lenders and Fannie Mae and Freddie Mac want appraisers to, everything needs to come out of the market, really, because the cost and income, they're different approaches, but everything, when it comes to value, they really want to see it based in the market.
Okay.
So you have 3 approaches to value, and you're supposed to reconcile those 3 approaches.
Okay.
Say, okay, the income approach said this, or we don't have enough data to complete an income approach. The cost approach isn't very reliable. We completed it, we have the data, but it's a 1930s house, so depreciation is speculative.
Okay.
You know, we can't really get to it. So then the market approach, so you're supposed to reconcile those 3, but then in your reconciliation, you can also look at the contract price.
Okay.
And you can give weight to, when you're, usually you come up with a range, and you weight that range, and if you see that contract, and you understand that the buyers and sellers, they're independent parties, they're knowledgeable, they're represented, and it makes sense, and it falls in line, you can consider that contract price in your reconciliation when you're developing your opinion. So.
Okay. Thank you, Peter.
Oh, you're welcome.
I hope that has been helpful to you today, learning about appraisals. If you have more questions, feel free to drop a comment or drop your questions in the comments, and I will get you an answer, or we'll get Peter to give you an answer. And I thank you again for joining us for this episode of Real Charlotte Living. Make sure you subscribe, watch some other videos, and I'll see you next time.